Hey everybody, it's Brett from Moonstream. Just wanted to give you guys a quick hello in person here in the studio doing some recording and want to do a quick market update. So we'll dive into the charts here in a moment. But I do see some encouraging signs that we're starting to bottom out. A little bit too early to tell. We'll look at this in the charts in a moment, but starting to see some of our signals turning green and on this chart over here on the weekly and the daily time frame. So it's starting to look pretty good. Let's dive into some charts and see if we can't dive into it a little bit more for you and give you some direction on what to expect next. All right, let's do that. All right, welcome back. Hope you enjoyed the new intro. We're not going to do that every time, but I was in the studio and thought it'd be fun to kind of give you a quick tour. If you'd like a full tour, by the way, of the whole setup, let me know. Recorded some video on that. But anyway, just to start out with some humor here, Trump saying the recession's unfortunate but necessary to get to the depression. And of course, we're kind of alluding to the rumors and potentially likely motivation that they are deliberately tanking the markets to both lower inflation but also interest rates and to pay down that 7 trillion, some are saying 9 trillion of US debt, and then see a rip-roaring rally. So we'll see what happens. And then, of course, we have here Jing Zhangpu reading the Art of the Deal, figuring out what to do next in the tariff war. So it's all in good fun, you guys. It's been such a volatile week with things pumping and dumping and dropping all over the place. A couple things, though. It's somewhat encouraging. We're kind of seem like we're putting in low here. And so on the alternative side, though, with Bitcoin, I do think we'll see another drop potentially down in that 70 to 72K region. Possibly down to the 69K. We see a big buy block down here because, not just because of that, we've been following the IBIT, sort of an indicator that I kind of noticed invented, or no, not really invented, but nobody's really talking about it. And it's been very accurate with the IBIT gaps on the 4-hour. And so just to jump over there, and let me just hop out of full screen mode so we can do that. And then back in, trying out the black dark background for some of these charts. Again, it's nighttime, so usually daytime I'm using the lighter charts here. But for those of you who haven't seen this, we've been tracking the IBIT 4 hours since inception all the way back here. Had a nice cup and handle breakout. And this is, of course, the BlackRock ETF. A lot of money has flown in and times out of this. But if you're familiar with, or at least have heard of CME gaps, it's basically a fair value gap that tends to fill when the markets are closed after hours and on weekends on the CME, which is the Chicago Mercantile Exchange. That creates an imbalance, and often these imbalance zones or fair value gaps get revisited. And what's interesting, and what I noticed that I don't know anyone else that's really talking about it, is we're also seeing that on the IBIT, which is a Wall Street product as well on the CME. So we won't get into the details of why that happens. It has to do with sort of similar to where banks can hold unrealized losses for any length of time. And these big organizations, when markets run against them after hours, they sort of take the opposite side of that trade and theoretically a loss. And so this is purely kind of my theory, speculation, and some empirical observations. But I have noticed that these always have filled quite with high probability. And so, of course, I was saying they were 100% accurate until I said that they were 100% accurate, and then they stopped working for a while. But anyway, it does appear that these are a working again and a fairly predictive area of where price will go. Again, big money looking to sort of, and the big market maker, the CME. I can't really prove this, guys. It's just what I've put together and why I think this works. But at any rate, back in here we had a big IBIT gap to the upside, and we thought that we were off to new highs. Bitcoin to 100K. We thought that we would not see these revisited. But as we know, we have seen lots of sell pressure, and we've come down and filled this gap, which was very similar to the CME gap. Not to get too technical with everybody, but what I'm getting at is this has become, I think, an interesting leading indicator for Bitcoin that we can use as a high probability magnet. That's why I have a magnet down here. So the reasons why, I guess, aren't really that important. But if we see that there's an unfilled gap here, again, back in November 6th of 2024, prices gapped up, and then it gapped up again. This has been filled down in here, but this gap hasn't been filled. You can see I have a note here saying unfilled gap. And so this will act as a magnet, and this corresponds to, let's say, about a 10% drop from current prices, which would equate to around 70,000 Bitcoin. So, I've stopped sort of questioning this, and until it stops working, I'm going to use it as a leading indicator. So what that might signify, and we're still in a downtrending channel here, that we'll see another push down to the low here, or the relative lows, just to flush out more of these margin traders and really put in a solid low. I'd rather see that we filled all these gaps to then really put in a bottom and have a rip-roaring rally. Also hearing that April's going to be kind of some sideways chop, and then May, maybe into June, but that's when we're thinking that things really start to run again. For a variety of reasons. Now, with that, I do want to revisit this chart here. I'm on a new keyboard here, so I'm having to look down. Of the USDT dominance we've talked about, which runs inversely to Bitcoin. Also a unique leading indicator that we've kind of come up with, and no one's really talking about. If you're new here, by the way, if you like this content, make sure to hit the like and subscribe. And special thanks to Max again for letting me hop on with you guys. Enjoy it. So this is a fractal from over here in the 2021 bull run, where, again, this is a chart of USDT, which is Tether, a stable coin called Tether dominance. And obviously, or you can surmise that they're inversely related. So the more money going into Bitcoin and crypto, the less held in stable coins. So we saw the drop down to this trend line here. But what we've noticed is since 2018, this rising trend line has acted as support. So if Tether bounces off of that and more money flows into Tether and stable coins and fiat, that would also imply more money is going out of Bitcoin and crypto. So all you need to do is understand the basic generality of that. So we saw that back in here, February, March, hitting highs in the crypto market and Bitcoin, and then we had that midsummer reversal and correction. So right in here, May, June, July, we saw money flow into Tether, into stablecoins, into cash, and out of the market. So this was that July 2021 correction that caught us all by surprise. Now we kind of have a visual on not necessarily why, but it's that we could see that happening. And then it pulled back. We saw that November 21 final high, and then we saw money flow back into and breaking these levels into the corrective mode in the bear market. So that's why I pulled that fractal over here, and these are not exact, but they are worth noting. So it's amazing how closely these overlay right now. So we pushed up here into this crypto correction zone, and we sort of started pulling back. And maybe I'll go to a weekly chart just to smooth it out a little bit. I think what probably happens is we pull down into this range, maybe go sideways for a bit, pull down, and then see another push higher. And then, or I'll just shorten it here, and then have a rally going into midsummer. And it's really hard to predict, though, with all these things. Normally, midsummer is kind of a weak time, but the cards are still on the table for a 200,000 Bitcoin end of the year with a massive rally, money flowing out of stable coins. Maybe we come down and retest this line again. But we do want to be watching this. If we get above this 6% on Tether dominance, then we're really getting into crypto correction zone, and we have to entertain that potentially that the high is in. I haven't seen any of my top signals forming. I don't believe that's the case, but this is one thing we're watching. And so a pullback here would be a rally in crypto, and then as money flew back into Tether, that would be sort of the opposite. So, we can't really derive too much from that, other than I'm watching that very carefully, and we'll keep you guys posted. So, anyway, jumping back over, we covered the IBIT, covered Bitcoin, looking at the 1 hour, 4 hour. things are very interesting here. We have a buy block and a sell block, right sandwiched on top of each other. What's encouraging, however, is this green money flow block. So this is one of our proprietary indicators called the early reversal indicator, where we have these arrows signifying lows and highs on all time frames. But the pro version, we've added in money flow. So big money flow block came in the last sort of 2 days or so, and that's worth noting. And so, typically I'm watching the daily and the weekly. The problem is, and the big elephant in the room, is that we have serious sell pressure up above. It's going to take a serious catalyst to get a big money flowing in. Now, I'm doing a special report and sort of an expose video on something that most people are not talking about. I may have mentioned that I'll release that could explain all of this. Arthur Hayes also has an interesting video about why tariffs don't matter, and they're going to have to start doing QE and probably already have started stealth QE, quantitative easing. So we just have to wait this out. I think we do bounce out of this range. It's going to zigzag up a bit. The point here is don't have tremendous FOMO. We'll probably push up to the 50-day exponential moving average, see some profit taking. The whole point is we want to see higher lows. That's the whole key of market structure, higher lows. But in these sell blocks, because there's big sell blocks on the total market cap as well, we have to get through. So what some interesting things though that I'm seeing, however, are that maybe there's some signs here that alt season's kicking up, because if we go to total market cap, again, lots of overhead, a lot of sell pressure. That includes Bitcoin. If we go to total market 2, does not include Bitcoin, but that includes Ethereum. Still a lot of sell pressure here. And so while Ethereum is looking interesting around 1,400, I think it's more interesting 1,000. Not as interesting as Solana in my opinion. But if we go to total 3, not including Bitcoin, not including ETH, it's looking a little bit stronger here. So inherently, this is kind of an alt season, altcoin chart here. So it's holding this support, and if we go back, how far do we go back? It's pretty strong support there. So if we get a bounce out of here, there's less overhead resistance, and if we can push up here, I think the alts, and maybe that's led by Sol and some of the other ones. I don't think it's going to be the micro caps and the shit coins and all the other ones that basically probably don't have enough oomph in them, not enough money in the system because of all that money that went into meme coins and blew out. Those were the altcoin season traders. So deep breath. I think institutional money still drives this next leg of the market. A lot of money on the sidelines. We know that. Just waiting for the right time and an opportunity. If we can see this break, this is a symmetrical wedge, so these things either break to the upside or downside. Then I think that with the amount of money on the sidelines, we could see this kind of pattern, and then obviously above resistance, all-time highs. The prior all-time high on total 3 was 1.13 trillion. We touched it, it rejected. Breakouts happen on the 3rd or 5th attempt, everyone. So let's hope for this. The 3rd attempt will happen. Probably push up, pull back, break through a retest. So I'm not giving up on alts. I'm just saying be careful with the alts that you're investing in. Make sure they have a revenue model, investors, a hot narrative, some way to make money or be acquired. And we're starting to see some M&A in this whole space, and so we'll maybe get into that in a future video. Solana actually looking pretty interesting. I was a big buyer in this 125 range all of last year. We did see that break down. We have some unlocks happening, but if we go to our signals here, this is kind of what I wanted to get to. Show me the chart, I'll tell you the news. The Solana is looking pretty good here. We have our signals starting to line up. This is our our trend strength indicator going green and above 20. And our signal line going green. You don't have to know what these are. This is our RSI Pro. These are bullish divergences. The whole point is when we start to see confluence on these, like this one, the early reversal indicator, and stay with me here because it's not only happening on the daily, it's also forming on the weekly. And when you have those two in confluence, big things happen. So I think we're setting up for a big rally here. It just might take a little bit more chop in April. But for me, we call it the four horsemen here. This ERI, early reversal indicator. Again, this is the actual indicator looks like this. Nobody wants to see that, but I think we've discovered when institutional programmatic buying kicks in, because it has to bounce out of a lower zone and above 20 within 3 time periods. And that takes a lot of volume, takes a lot of momentum and institutional money, not retail. So we have ERI, TSI, Signal, and this RSI. So it's very interesting. I'm watching that closely. And sorry guys, I'm talking fast because I got some more work to do tonight, but I wanted to get this out to you. And so oversold on the weekly. When we start to see this turn higher on the weekly, then it's game on. And we can see back here, if we see ERI, TSI, these all align on the weekly. That's when we have this big push out of the September 2023 range. So, you know, a lot of uncertainty in the markets, obviously, but things are looking pretty good overall. We'll want to see some confirmations on these, but some of the other alts I'm watching are Aptos. We have some nice green here after, you know, selling off a bit on Wednesday. You know, but nice seeing some kind of higher lows here. It's interesting. Aptos, SUI, these are all that I've been kind of dollar cost averaging into. Stacks, Ondo's looking really interesting as well. So, you know, a little bit early to be saying go in. I'm starting to dabble a bit. Helium, Filecoin, and a couple others, but anyway, that's the update. We'll keep you updated here as things go along. We'll see what happens through the weekend. One of our students did an interesting study that showed that Sunday is kind of the new sell day. Last year, we saw the biggest sell days on Tuesdays, but it looks like Sundays are sort of big sell-off days, and Wednesdays are sort of big buyer days on average. But of course, anything can happen in these crazy markets. So again, I hope you like this video. If you can like and subscribe and comment down below, and I'll talk to you guys soon. Got a little outro video for you on this one as well. So hope you enjoyed it. All right, take care, everyone. Bye. Okay, so hopefully you enjoyed that market update. Again, this is Brett from Moonstream. If you like the content, always like and subscribe, obviously. And if you'd like to see a little bit more content, you can find us over on YouTube at moonstream.io. But special thanks to Max for letting us show up here and share time with you guys. If you'd like to do more videos like this, put a comment down below. Make sure to like and subscribe, and we'll talk to you soon.